Let's have a conversation about timing when it comes to credit card payments. When should you pay your credit card bill? So here's an overview I want you to pay attention to. So if you pay your credit card bill in full each month and you do not regularly use more than 30% of your credit limits, timing really doesn't matter. I mean, it doesn't matter as long as it is on or before the due date, right? Now, if you carry a balance on your credit card from month to month, or if your balance regularly exceeds the 30% of your credit limits, you might benefit from paying early. So why 30%? 30% is actually the threshold in terms of CUR if you want to have a good credit score. CUR, credit utilization ratio, always trying to be below 30%, 35%. Now, when is the best time for you to pay your credit card bill? Well, at the very least, you should pay your credit card bill by its due date every month. So if they say due date is the 28th, pay by the 28th. But even better, pay before the 28th. Okay. If you're like most credit card users, as long as you do that, you're paying before the due date or by the due date, you're good to go. But in some cases, you can do yourself a big favor. A huge favor by paying your bill earlier, right? That's because the balance that gets reported to the credit bureaus can have a direct effect on your credit scores. Now, to understand the effects of paying early, it helps to know how the credit card billing cycle works. I'm going to explain this to you. And so it's important to really understand that when we look at the billing cycle, things are a little different. So credit cards operate on a monthly billing cycle, and there are three dates to understand. Three important dates. You have the statement date, you have the due date, and you have the reporting date. Let me break it down for you. So the statement date, basically once a month, your card issuer compiles all the activity on your card account and generates your statement. The date this happens is your statement date, also called the closing date. Anything that happens after this date, including activity between the time your statement is created and the time it reaches you in the mail, will go on your next statement. Then you also have the due date. This is the date by which you must pay at least the minimum amount due. The due date is usually about 3 weeks after the statement date. And then you have the reporting date. This is the date on which the card issuer reports your balance to the credit bureaus. And this is important to really have a clear idea about that. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. One thing I need to really explain here is that paying early your credit card bill could help your credit big time. Now, one of the primary factors in your credit score is something called your CUR. I just mentioned it, right? You have your credit utilization ratio. This is basically the amount you owe as a percentage of your credit limit. Let me give you an example. Very simple example. Let's say you have a $5,000 credit limit and your balance is $2,000. So your utilization ratio here is what? 40%, right? 2,000 divided by 5,000 multiplied by 100 to account for the percentage. So generally, the lower your utilization limits, the better. And anything above 30%, 35% could be damaging to your credit score. So there is basically an inverse relationship between your CUR and your credit score. So the lower your CUR, the better your FICO score. And so this is where changing up your credit card payments comes in, right? So the thing is, credit scores are based on account information reported to the credit bureaus. That information includes your balance and your credit limit, right? This is really an important element to think about. And what happens here is that you have a scoring formula that really determines your utilization ratio, but also this information is not sort of static. It varies. So I gave you earlier the example we talked about where you have a 40% of utilization ratio. This will have a detrimental effect on your credit score because 40% is a little too high when we talk about CUR. You want to be below 25%. So if you had, instead of $2,000 as credit limit, if you had $1,000, things would have been different because $1,000, we're talking about 20%, right? 1,000 divided by 5,000 multiplied by 100. So you have a 20%. 20% will have a more positive effect. Not more positive, a positive effect on your FICO score than 40%. So basically, when your credit card reports your data to the credit bureaus, the issuer will report 20% as CUR as opposed to 40%. By the way, boss, welcome back. I want to welcome you, but I also want to remind you of today's topic. We're having a conversation about the best day to pay credit card bills. I need to really explain the fact that paying early also cuts interest. So when we talk about paying early, I'm not recommending that you pay early because you can actually increase your FICO score. Of course, that's part of it, but it really cuts interest. When possible, it's best to pay your credit card balance in full each month. Not only does that help ensure that you are spending within your means, it also saves you on interest. What we have seen in our research here is that if you always pay your full statement balance by the due date, you will maintain a credit card grace period and you will never be charged interest. And because interest can really go up though. If you have a high balance, interest charged on a $10,000 outstanding balance is not the same thing as interest charged on a $1,000 balance. So there are some serious consequences there you need to be aware of. And one thing I want to say here is that, if you will not be able to pay the full statement balance, and you have to carry that into the next month, paying early can reduce your interest cost. That's because of something very simple. The interest you are charged is based on your average daily balance. Okay, average daily balance. Pay attention to that. Now, here is an example. Say you start with a 30-day billing month with a $1,000 balance, right? If you paid $400 on the last day of the month, your balance will have been $1,000 for 29 days and $600 for one day. Your average daily balance would have been around $987. If your credit card had a 15% interest rate, your interest charge for the month would be what? $12.33. Now imagine that you had paid that same $400 halfway through the month. Your balance would have been $1,000 for 15 days and $600 for 15 days. In that case, your average daily balance would be $800 and your interest charge will be around $10. So you cut your interest payments by nearly 1/4 just by moving up your payment date. So again, the example here is the numbers might be a little small for you, but if you actually add a zero, like instead of $12 in interest, you have $120 in interest, then you start seeing some real difference here. Now, why is the due date so important? Like a lot of folks are talking about due date. The due date is important not because you're scared about the credit card issue or whatever. No, regardless of when you do it, make sure you pay the minimum amount due. You need to do it by the due date. Otherwise, there are some serious consequences, any of which you do not want to have anyway. First of all, your issuer could charge you a late fee, and you do not want to actually get into a territory where the issuer is charging you a late fee, because when they start charging you late fees, they might even change your APR, which you don't want that. And if they change your APR, they might also actually report you to the credit bureaus. So you have a series of consequences, bad consequences that you do not want to deal with anyway. So be very clear to not pay beyond the due date. You have to pay by the due date. So that's the first thing. The second thing you need to also think about is that your credit scores could suffer. As I said before, payment history is an important element when it comes to your FICO score. And as a matter of fact, payment history is the most important element in your FICO score because it accounts for 35%. The second next item is your CUR, which accounts for 30%. So when we think about payment history accounting for 35%, if you miss the payments, that's going to have a really huge impact on your credit score. And it's one of those things where you have to really think about it. Okay, are you better off actually having a higher FICO score, or are you better off actually making sure that you pay attention to the due date? Remember, payments that are actually more than 30 days late will show up on your credit report, or they can actually do some serious damage. Payment history is the single biggest factor that I just said in your credit scores, and a late payment can stay on your report for 7 years. 7 years. Think about it. This is just a one-time thing. You just miss a payment, and but that payment, it's not a default. That delay will stay on your credit report for 7 years, which means if you're thinking about actually buying a house and getting a mortgage, for instance, in the next 7 years, just you do not want to have any payment history, any missed payment issue here. Boss, I want to quickly remind you once again on today's topic, we are having a conversation about the best day to pay your credit card bills. Let me give you other tips for managing your bills. So the thing is, if you're trying to look for the best day to pay your credit card bills, it's important to look at your whole financial situation, not just your credit card bills. So aside from keeping an eye on your credit utilization and making a payment when it starts to get too high, here are a few other pointers for managing your credit card bill. So you want to keep a budget and track your spending. You have a lot of apps that can help you do that, from Empower to Personal Capital to YNAB, okay, to every dollar, for instance, to Mint. So you have a lot of ways to actually track your budget, and you can do it even manually. You can use Excel. You can use Google Sheets. So you have a lot of opportunities when it comes to making sure you have your budget, and you want to sign up for text or email alerts from your issuer to keep actually tabs on your balance and your bill and due date. That way, you know something is happening. And the thing is, if you have, let's say, if you think that you're having problems to actually pay your bill, just give them a call. Call your issuer to move your bill's due date. If it doesn't coincide with your pay schedule, for instance, this is another issue. If you're trying to really save cash, this is something to consider. And you want to review your statements carefully every month, because by doing that, you are able to spot and actually correct unauthorized charges if they arise. Because unfortunately, we live in this world where stuff happens. People actually, there's something called the dark web. I'm not digressing here, but people buy credit card numbers on that dark web. And if somebody can just play around with your numbers, and you see charges, they really come out of nowhere. But you have ways to correct those, and have the ability to have a system whereby you are paying your bills on time all the time. And you also want to set up automatic payments. That way, you know that you're able to, this can help you avoid accidentally missing a payment due date. And that's what you want. You want to be in a situation where you do not miss any payments. You want to make all your payments on time, all the time. Let's talk about when to pay your balance early, because there are some cases where paying your balance early is really cool. It really helps you. It really helps you in terms of your credit score. It really helps you in terms of your CUR. It helps you in terms of your ability to manage your finances properly. And so it really depends on the situation. If you have, let's say you have an extra cash and you want to and you have an outstanding balance, you're just trying to really get rid of that, then you can pay your balance early. You can also try a balance transfer deal, for example, to actually pay your balance early. And in some cases, it might make sense to make multiple payments on your credit card bill, right? The thing is, if you cannot pay, the full balance by the due date, but you know that your cash inflows really are kind of cold throughout the month, just make small payments. And by the time the due date is there, you would have done a lot of damage in terms of to that outstanding balance. So this will help you a lot in terms of maintaining a certain orientation in the long run. And so we advise all our clients to make multiple payments on their credit card bills whenever it's possible. And you need to understand that you also need to understand when your card issuers report your balance to the bureaus. And now you cannot actually find out unless you give them a call. You can call them and ask that question. Don't be shy. Just ask the question point blank. When are you reporting my data to the business credit, to the credit bureaus? That way you know exactly how to plan yourself. Now, I'm not saying, you want to make payments and think about how you can manipulate, how you can impact the reporting process to the credit bureaus. No, but you just want to know, this is just a FYI, so you know mistakes to avoid, down the road. So this is kind of cool. And one thing I also want to say here is that you need to actually remember that in some cases you should change your bill due date. If the bill due date doesn't work for you, be open enough about it and change the due date. That's totally fine. It's totally fine. Nobody's going to complain. Nobody's going to ask you why you did this, why do you do that. No, it's just that the due date's not working for you. So you want to have a due date that works for you. Let me give you a few pro tips before we close to this conversation. So when we talk about the best day to pay credit card bills, you need to understand that you really will always want to pay in full on time if you can. What I mean is, if you charge $1,000 on a credit card, you want to pay $1,000 before the due date, and you want to pay the full amount. Why? Because this forces you to actually live within your means. It really forces you to actually be aware of the fact that a credit card, like a plastic, is really your money. And then somebody else's money, this is your money. And you have to make payments. You have to pay everything in full at some point. So really, this will help you recontextualize the conversation so you have a clear idea how to do things. Another thing you want to pay attention to here is that you want to maximize, you want to pay later if you want to maximize financial incentives or financial returns, but you have to be in a situation where you are in full control of your finances. You also want to really, if you want to improve your credit score, you want to pay sooner. So if improving your credit score is your number one goal, then you want to try to pay sooner. And another way, what you can also do is think about actually pay as soon as possible if you want to reduce interest rates. So interest charges, remember, they actually accrue throughout the month, and you just want to be in a situation where you are reducing them. And the best way to reduce them is to basically find a way to talk to the credit card issuer if need be, because some cases stuff happens. You may not have planned it, but stuff can happen, and it's just important for you to be clear about what the rules are, to be clear about what the rules are in terms of payments, to be clear also in terms of the flexibility here, because this is what you want. You want to have flexibility. The rules are one thing. But the flexibility really is going to help you, really helping you pay your credit card bill on time, but also increase your credit score. Because the bottom line here is you need to actually find ways to manage your credit card bills properly and effectively in the long run. One thing I want to say before closing to this conversation is that, if you want to manage credit card bills, you want to make it a goal to pay your balance in full every month. Create a budget and avoid spending more than you can afford to pay off. Think twice about financing large purchases over time, unless you have a 0% APR premium or promotion. And you also want to check an online payment account to keep an eye on your balance and watch out for unauthorized transactions. You want to monitor your credit score to better understand how your actions impact your credit. So overall, this is just a great, fantastic sort of opportunity for you to pay your credit card bill on time and in full. Thank you so much for your attention. I really appreciate it. In today's conversation, I just spoke to you about the best day to pay credit card bills. So I gave you the overview, the pro tips, and now I'm doing the recap. Thank you. God bless you. I'll see you next time. But until then, remember, stay marvelous.